Hello and welcome to our 28th edition of FSI Fridays. I'm Johansson live in Charlotte, joined by
Edwin live in Boston.
Hey Edwin, what do we have lined up for today?
Thanks, Johansson, and those in the audience. Today we're going to talk to our worldwide leader of financial services and learn about Microsoft's renewed mission in FSI.
Second, we'll talk about the future of financial services given the unprecedented market conditions and how the modern workplace will continue to evolve.
Third, we'll talk about Microsoft's role as a co-innovator, growing partnerships with Fintechs and financial institutions to augment and accelerate their own capabilities.
Then we'll wrap it up with Q&A.
Today on FSI Fridays.
For those of you watching live or on YouTube, as a quick reminder,
we'll spend around 30 minutes on today's topic
and leave the last 10 to 15 minutes to address any burning questions.
So please use the Q&A window and we'll monitor for questions during the presentation. If you're watching the recording, feel free to use the comments below to answer your questions.
So let's get started and meet our presenter for today. Edwin, who's our special guest this week?
We're thrilled to be joined by our Corporate Vice President of Worldwide Financial Services, Bill Borden. Bill, thanks for being on the show today. Can you let the audience know what your role is at Microsoft and what your typical day entails?
Sure. Thanks, Johansson and Edwin. It's exciting to be here. This is a great event to join FSI Fridays. Let me tell you a little bit about myself and my background. I've been with Microsoft almost a year and a half now. I come to Microsoft after spending 21 plus years in financial services. But before that, I started my career in tech. So 11 years of tech, 20 years at financial services, and that brings me to the position of leading worldwide financial services for Microsoft. And in this role, I'm really excited to have the opportunity with the team to help drive our strategy forward for how we deliver for our financial services customers. And we define that as serving banking, capital markets, and insurance companies. So in this role, our team has responsibility across the organization to bring the voice of the customer to how we think about our product roadmaps and what we're building today and into the future, who we partner with in the industry in terms of our ISV and our tech partners and our systems integration partners and how they build first-party solutions on top of our capability sets. And then ultimately, how do we take our solutions as well as our partner solutions to the market by working with our field and servicing teams to deliver for our customers, understanding their needs and how we position that for delivery.
Thanks, Bill. So our audience knows that we like to ask a fun question of our guests. And we hear you have 2 truths and a false for us. Can you share?
Sure, happy to do that. I do have 2 truths and a false, so I will read these to you quickly. So one is, I regularly played pickup basketball with Michael Jordan. The second one is, in the spirit of Inauguration Week, I have met with 4 U.S. presidents. And the third is, I've had dinner with Prince Alawid bin Talal at his desert compound outside of Riyadh, Saudi Arabia.
All right, so just so the audience knows, we actually don't know the actual truth or the false. So my guess is you've met, all of them are true except you actually met with 3 presidents. What do you think, Johansson?
I'm going to go with the Michael Jordan as the potential false.
Okay. All right. Good. You guys are hovering around being close, but not close. I have not met 4 U.S. presidents. I've met 2, so close to 3. But I have regularly played basketball with Michael Jordan back in the day. And when I was to literally have dinner at a desert compound with Prince Alawid, it was fascinating. So.
That's amazing. Next time you meet MJ, tell him Edwin says hi. So let's get right to it. So Bill, and thank you for sharing. You joined Microsoft from industry just over a year ago from Bank of America. And since then, you've been an integral part of Microsoft's mission in financial services. I'm sure our audience is interested in hearing about your journey and why you decided to join Microsoft.
The timing was just perfect. If you think about the career that I just talked about previously, at a time when Satya and the leadership team are looking to combine the tech intensity and the investment we've made in our product suite and our capability suite to provide solutions and capabilities horizontally across our cloud capabilities. combined with the tech partners, the largest partner set that we have in the industry using our capabilities to bring solutions to our customers. And so now the idea of industry on top of that, to bring the voice of the customer, to bring individuals from industry to Microsoft to help shape and think, how do we go to market, think about our solutioning and our product development differently, bring our horizontal capabilities together to perform unique capabilities and provide unique capabilities and benefits specifically to the industry. And this notion of industry leadership was just a perfect time for me to come to serve this capability for Microsoft. And obviously that's in partnership with the other industry strategies that we have in place with our other industry leaders.
Thanks, Bill, for sharing that. Microsoft in the past has typically been viewed as a technology or software organization, but as you mentioned, over the last few years, we've been more aligned to the industry focus. Now, as the worldwide leader for financial services, our audience would love to hear your perspective on that industry alignment and how Microsoft has positioned its mission in financial services.
Sure. It's exciting because we're taking an industry approach and building on top of the rich capability sets that Microsoft has put in place, right? Microsoft has laid out a platform of capabilities that are unmatched in the industry across all of our cloud capabilities. And we've built solutions on top of that. And we've built a culture of change on top of that to think about transformation and how we drive transformation to serve our customers, all leading up to an incredible mission statement, right? To enable every individual and organization on the planet to achieve more. So that platform's in place and it's been built for many, many years. And we are now laying on top of that a strategy specific to how do we serve vertically the needs of the financial services industry. So what capabilities, what data models, what architectures, what extensions of our first-party solutions can we extend specifically to the financial services industry? And then how can we work with technology partners to bring their capabilities to leverage our full suite of capabilities as well? And that creates a mission statement for us to help financial services customers grow responsibly, as they have to do in a heavily regulated environment, and to help them uniquely differentiate to develop their customer relationships. We're being very clear about our intent to drive solutions to help our customers grow and build their relationships with their customers. And we're not going to compete with them. So we're not going to offer products and services that will compete with them. We're about enabling them to grow, build for their customers, build new revenue opportunities, build new ecosystems that they can participate with, and help them achieve and create ultimately new business models that support the unique needs of offering financial services and products and services to individuals, businesses, governments, and institutions.
Hey, Bill, I'm super excited that we're really focused on business outcomes versus, just the technology. So thanks for sharing that perspective. So we have another question here. The global pandemic has had a significant impact on society and our financial services customers. So as we look to the year ahead, how do you see the current environment impacting FSI in 2021?
Well, look, it's tough right now, right? It's hard to make money with near zero interest rates. There's tremendous strain on the top line in terms of revenue growth. There's liquidity challenges. There's capital allocation challenges around how do we allocate capital in this environment. So it's tough, but it has been incredible the way that the industry has responded, right? We've talked a lot about the phases of thinking through and moving through the pandemic in terms of respond, recovery, and reimagine. The industry as a whole, whether it's banking, capital markets, or insurance institutions, they have really shown their ability to serve their customers at a time when they really needed it. And so they weren't necessarily, considered, frontline workers like our healthcare workers, if you will. But they were certainly there in need to make sure that the banking system worked, the capital markets functioned, insurance was readily available to allow individuals and organizations to run their businesses and manage their lives. So the industry worked. It was incredible. And to think that the industry worked in a way by bringing 90+% of their individuals at home, right? If you had to talk to a trading floor a year ago or pre-pandemic and actually presented the case to them that you could actually move your trading operations to bring all your employees home, people would be like, no, you can't do that, right? But the reality of it is the pandemic forced the ability to think differently, to think about how to run your business differently, think about how to leverage technology differently. And as many CEOs have been quoted, there were decisions that typically would take months in a highly regulated, control-oriented institution that were made in weeks, days, and minutes. So they were able to solve for making those decisions using technology, but still doing it in a way that they were operating within their control frameworks and operating within the regulatory requirements that they need to serve in all parts of the world. So it was rather dramatic. But what you can see is now moving out of respond and recovery into the reimagine phase. Clearly, the thought process around the use of technology differently to remain agile and to remain resilient now, because resiliency is now top of mind with regulators, right? It's the fact that you can't be disrupted. You need to be online. So it's not just having a recovery standpoint, but being resilient throughout your value chain and your business model chain to serve your customers. So resiliency is top of mind. And so when you think about the use of technology to do that, that's what institutions are focused on. And clearly the institutions that had invested in and leveraged technology in the past are clearly feeling the benefits of that going forward. They're able to think about the reimagine phase more quickly. They're able to think about the use of data and AI differently because they've already invested in their data and the data cleanup and the AI models to think about leveraging that for new products and services. So they clearly feel like there's an advantage. For those that hadn't invested in technology pre-pandemic, clearly the bell has been sounded for them. But then again, how do you do that in this constrained revenue growth environment and constrained environment around creating profits? But it has to be done if you're going to survive because of the competition. And in this space, there are other organizations, fintech organizations that are looking at every part of the value chain and creating opportunities for offering products and services to customers that existing institutions have to compete against. So the idea of redistributing your technology investments and budgets to focus on projects that help you run the business today, but create savings to actually invest in transformative projects is on top of every board's agenda right now.
That's great, Bill. And as Satya said, 2 years of digital transformation in 2 months. This pandemic has certainly accelerated the behaviors and expectations, and really the need for digitalization. I'm curious to hear your perspectives on how traditional financial institutions have responded, and what extent do you anticipate this change? And even maybe even talk about how the modern workplace is evolving around that.
Yeah, look, the top of mind change has been the idea of what's occurred, right? Remote everything had to occur. And remote everything drove the notion of a different way of businesses operating and collaborating together. So the workforce orientation around getting work done, continuing to serve customers, doing that in a way that's expected to keep the environments up and running, to be able to do that and still maintain profit levels, to still maintain risk and controls in place has been huge. And so collaboration around the existing workforce is still top of mind because going forward, to the extent that businesses are thinking about what does the new workplace feel like going forward is going to change, right? So the notion of will everybody come back into the office going forward is probably not going to be 100% of the case. Clearly, if you look at surveys that have been done, right, many employees are open to wanting to have the opportunity to have time to work remotely and continue to do that. But the notion of how you do that and still create environments where you can have your workforce come in and still collaborate around innovation, around idea sharing, and around just the human aspect of coming together is still very important. And so the modern workplace will change, it will evolve. It will evolve around collaboration. It will evolve around workforce productivity on the front line, whether you're a frontline banker or relationship manager, whether you're a service provider. The idea of being able to have tools and data to drive real-time expectations around what customers expect so that they get the right product and service that's uniquely tailored to them is still a push. And the idea of doing that with real-time communications puts a whole different set of opportunities and prioritization around the idea of your data estate. And so in order to serve that collaboration, it also leads towards data and AI. And as I mentioned before, organizations that have invested in that their data estate, data modeling, data AI, data sciences, and thinking about how that was going to move forward, clearly have an advantage coming out of the pandemic. Others that hadn't invested into that, clearly projects are prioritized around that to support the idea of real-time communications, real-time product creation and new product development based on data and insights. And then I mentioned workplace optimization as well. The mix between remote and work, the idea of coming back to a large headquarters. I was talking to an organization earlier today about they're thinking about a hub and spoke approach to have spoke locations so that employees don't have to commute as far but can still come in and collaborate. Lots of ideas around workplace optimization around that. And then foundationally, collaboration in terms of our tool set around Office and M365 and Teams has just been traumatic. And our ability to serve customers in a different way, to continue our product life cycles quickly around offering these capabilities is tremendous to enable this notion of collaboration. That's going to extend into ultimately consumer experience. Consumers are expecting the notion of collaborating with their institutions that they do business with in a different way as well. And so you're seeing that extend out into different consumer experiences as well that extend employee collaboration.
Oh, Bill, one of the things that resonated with me is the whole, data and AI explosion. We just had a couple of sessions previously on FSI around it. And I can only imagine where we'd be 10 to 15 years ago if, we were in the same situation. So I think we're in a really good position to support our customers as well. So thank you for sharing that. Next question. So to what extent is Microsoft going beyond pure support for traditional financial institutions to help them actually co-innovate and drive innovation? And if you don't mind, I'd like to integrate a sub-question. How is Microsoft uniquely positioned in helping Fintechs drive innovation?
Sure, there's a lot in that question. I'll let you pack that in. Going above and beyond support is an interesting way to say it. It's just an evolution around how we serve our customers. It's part of our overall strategy. Right, it's not just the technology, it's our ability to come in, listen to our customers, listen to what they're trying to drive for, bringing ideas to the table in a consultative manner, understanding their businesses, understanding what we're seeing across different industries to help them think differently around their transformation, to help them think differently around strategies that allow them to save costs now to run their business, but be able to reinvest those into new products and services and user experiences. And so our resources to do that, whether it's our industry digital specialists out of our industry teams from a consultative point of view, whether it's our MCS team and their ability to consult directly with our customers, combined with our field teams, our relationship teams that have been with our clients and know their businesses, the combination of that, understanding their businesses, understanding their culture, and then bringing our technology and our partner solutions to the table, that's just a way that we are uniquely serving our customers differently. That's helping get to the co-innovation discussions where we're at the table together, and the co-development discussions where we'll bring our engineering teams to talk directly with our customers' engineering teams. And then the governance and the methodology around how we work together on multi-horizon approaches and methodologies to have a long-term approach to helping them drive for transformation, and then helping them measure their impact of transformation. So we're doing a lot of thinking around the journey to cloud and how fast the utilization of products and services are being used by the customers, because it does tell a story around our customers meeting their objectives over time. And is that transformation actually driving the metrics and the measures that are actually important to their business strategies as well? So measurement of that as well. So it's that whole combination of activity and our approach to the market that we think is different. And then how does that help us position Fintechs, right? Fintechs are part of the opportunity set, right? I was just reading an article where Jamie Dimon was quoted as saying, yes, we should all be scared bleepless of Fintechs, right, in terms of competing with us. But it's understanding them and understanding, are they competitors or are they partners? Is there co-opetition? Plus opportunities for acquisition because of the valuations that are put on these fintechs, is now changing kind of in this environment in 2021 around the ability to actually have fintechs be bought, right? American Express just bought Cabbage, for example. So fintechs are part of the equation. It's a part of the build buy equation. Many of the fintechs are solution partners that we are talking to and engaged in. We want the leading edge fintechs to be leveraging our capability, our cloud set, for them to build their solutions on, so that we can have those joint discussions with our customers around how those institutions can be a part of the solutioning for customers, and or if they've come up with ideas, how our customers can actually build those on their own, leveraging our technologies. So it's an intertwined set of co-opetition that we're helping fuel in the marketplace around fintechs.
So Bill, along the lines of that conversation, 2020 has really been another strong year for overall investments, whether it be venture capital or M&A and private equity, specifically in fintech. We've seen corporate venture capital such as Microsoft's own M12 be particularly strong. For example, we see that corporate venture capital has reached a near record participation rate in 2020. What do you make of this?
Well, look, the whole idea of fintechs looking at the complete end-to-end value chain across these industries, banking, capital markets, and insurance, or across complete customer journey scenarios. And they are looking at discrete elements of those customer journeys and the business value chain and saying, where can I optimize? Where can I create value? Where can I create disintermediation? So they're coming up with tremendous ideas around helping the industry, which is ultimately going to serve customers differently. Serve customers differently uniquely with products and services they understand today, or come up with new products and services that they didn't know existed, but really meet what they're trying to accomplish, either as a business or as an individual. So it's exciting in terms of the amount of energy that is being invested, and it's attracting capital because of the valuations that you see of these companies, particularly the companies that were the startups that are now real behemoths, right? When you think of PayPal, when you think of Stripe, right? These are now valuations that are bigger than many banks around the world, right? So the idea of the attraction of capital is going to continue. And so the idea of these fintechs today, and the ones that exist today, being either partners and or opportunities to be acquired, the larger institutions are going to continue to look at. We have to look at, because remember, our strategy is our core capabilities and our ability to bring our multi-cloud solution along with our partner community. And so we have to be looking at the established partners today, but we also have to be looking at the up and coming partners that are thinking about new processes or new technologies or new approaches to doing things differently. And so that's why we have to be on, who's the next Stripe, right? Who's the next PayPal? Who's the next Plaid? And so we also are looking very extensively at that. And so we're looking at that entire ecosystem of maturity around the fintech community. And in some cases, we will invest directly, like through M12. But most importantly, between our commercial partner team and our business development team and our ventures team and our M12 team, we collectively are looking at the industry as a whole, because we want to make sure that those best in breed technologies are partnering and building on our capability set so that we can serve our customers.
Thanks for sharing those insights, Bill. We're excited because next week we're actually going to have a partner showcase, solution showcase on next FSI Friday. So, looking forward to highlighting a lot of our partners' innovations as well. So, Bill, how is Microsoft participating or supporting the fintech ecosystem globally? Can you talk to the audience about Microsoft's involvement in global hubs or accelerators?
First off, whether it's through M12 or whether it's through other organizations that are keeping a pulse on the investment space for fintechs, we participate in shows, we participate in forums, we participate with our partners that invest in fintechs. MasterCard's a great example of that. They've got a great program, an accelerator program to actually help startups get funding and seed capital. So there are many ways that we're working around the ecosystem of fintechs directly or through our partners to understand who's up and coming, who's growing, what the new ideas are, what the new uses of technologies are. And we're going to continue to do that to stay plugged into the community. There are also things that are going on in the industry that are kind of outside selling directly to our customers, either a bank or insurance company or capital markets company. There are a lot of institutions and solutions that are popping up that are serving the industry. So, for example, there's a big trend right now for institutions to think about technology that is core to their value proposition versus technologies that are more of an expense that they have to have just to run their businesses. Do they need to own those, or can they outsource those or buy those capabilities? So a lot of view of middle and back office capabilities that institutions might say, you know what, I'd rather rent that or buy that as opposed to actually owning it. And so that's led to some interesting, we just made an announcement with a partnership with a company called The Hub, which is a combination of IHS Markit, PIMCO, Man Group, and they have chosen Microsoft Azure to build their platform on. And that's exactly what they're doing in the capital market space, which is looking at middle and back office capabilities and commodity pipe and commodity data solutions that they could actually build as a utility, which would allow the capital markets industry to actually leverage those tools. We're looking at payments providers around the world. As you know, payment networks, particularly real-time payment networks, are popping up all over the world as countries build real-time payment systems. So again, how do we support the development of those systems directly with our capabilities and with our partners? And Fintechs are playing a major role in looking at these ancillary services and capabilities as well to serve the industry. So again, it's another reason why we have to stay plugged into the ecosystem.
So, Bill, could you just expand a little bit on Microsoft's role, not just in supporting and partnering with the fintech ecosystem, but also the broader financial institutions globally?
The business model thinking around how institutions are looking to drive value to their customers or new revenue opportunities for themselves is kind of along three dimensions, right? So from a vertical perspective, how do I continue through my channels and through my relationships offer new products and services? Do I need to build it or can I export it in from the outside? But again, how do I own that interface to my customer vertically and provide that to my customers around my brand and around my experience? There's the other notion of looking at business models that extend what you do horizontally. So if you have best of breed capability, can you extend that horizontally into other ecosystems? If I have a platform that's best of breed for offering insurance solutions, why can't I offer that to middle and small insurers as a platform? Which is obviously something we've done with Allianz and a joint venture that we're doing with them called Sincere, where we're helping them take their technology and offering it to the marketplace. Creates a new revenue stream, creates opportunities. How can I extend into ecosystems? So how can I understand products and services that might be specific to the SMB marketplace? Something that I don't want to build, but I want to bring into my environment vertically. So this notion of vertical and horizontal extension into ecosystems and the input and export of capabilities is really interesting. And then there's the notion of the idea of, well, what if I don't want to create products or I don't want to use my channels at all and I just want to orchestrate capabilities and services that I don't build or own, but my brand is so strong, I can orchestrate that and create revenue and opportunities around that to serve customers. So those are kind of the dimensions that we're thinking about. So that as customers are thinking about the dimensions and where they want to play and where they think they have value and where they think they have market power, the idea is how are they thinking about their technologies to allow them the flexibility to get there, to start moving into those business models, to create new revenue streams, to create opportunities to invest in other ways to participate in those ecosystems. And so that's where we're spending a lot of time thinking about it with our customers and bringing those ideas where you asked me that question earlier around how are we being beyond just a technology provider, but we're helping them think about their businesses in different ways.
Bill, thanks for sharing that perspective. I mean, there's many different dimensions with which to, consider, and I'm glad we're helping our customers think through it as well. But with customer expectations increasing, the complexities continuing to increase with it, are fintechs making things easier? And if so, how?
They're making it easier, yes. They're coming up with new ideas. They're coming up with new ways to serve customers. They're coming up with new technology uses. So from a consumer of financial services, whether I'm a business or an individual or institution or government, you want the best capabilities. You want the best products and services that meet your needs. You want the best insights that are give you perspective around how you want to operate. So you're just looking for the best. And the environment has changed as well too around financial services, where now it's not so much I am locked into thinking that I'm only going to get the best from these big brands that have existed for years and years and years. No, there's this notion that particularly millennials, they are willing to switch and move their buying decisions and patterns based on who's providing them the best service or the best product at the best price. And then even on the other end of the spectrum, right? Older customers have now, because of the pandemic, they have become much more digital savvy. In a way, they've been kind of forced to use tools from a technology perspective. So this notion of being locked in to services and financial services is very different. The other expectation from consumers and businesses is financial services always going to be based on a transaction? Meaning that, oops, now I'm thinking of a mortgage, so now I'm going to deal with my bank, as opposed to I'm shopping for my house, and actually when I see the house I want, there's an activity triggered around the funding that I can get for that house, which also triggers an activity for the insurance that I need for that house, and it's part of one experience. That's the direction that consumers and businesses are expecting, right? Financial services embedded in your daily individual or daily business experiences. And so the organizations that understand that and pivot to that and help drive that and help enable that, I think are the ones that are going to reap the most benefits and take market share. So it's really exciting environment around that. It's complex in terms of the idea of the opportunities to think about. It's complex in terms of the competition. It's complex in terms of doing that all in a regulated environment where you've got to deal with security and compliance controls that other industries don't have to deal with. But there is obviously a lot of opportunity and large profit pools that these institutions are competing for to make you want to be involved in that complexity to go win.
Great, Bill. As you mentioned, with the added pressure for speed, that has really changed some of the approaches for financial services organizations. For example, the difference between buying or maybe building innovation. So heads up, Bill, there's a multi-part question here. How is the sudden surge in demand for digital solutions impacting the strategy for how Microsoft supports small businesses through the banks that support them? And then I also recently saw an announcement that Microsoft made around a $50 million investment fund focused on Black and African American owned small businesses. Would love to hear your perspectives on this.
Yeah, with the pandemic, tremendous amount of pressure on all of us in the economies around the world. But as you can imagine, a lot more pressure on small and medium sized businesses, right? They just don't have the resources and the capital to have the wherewithal to be on the sidelines for months and months and months with their customers not doing business with them. So tremendous pressure there. And so the idea of how institutions support that and how the industry supports that has been pretty incredible with regards to obviously what the bigger institutions are doing to provide relief by extending payments and paybacks and actually retiring certain loans, having moratoriums on payments and those types of things, to industry and the government having investments, obviously through, in the US, an example, right, through PPP to actually have dollars for companies to use to actually stay afloat. Those are all tremendous sets of activities that also need underlying technology to make them work. And so we've obviously been spending a lot of time with institutions and with state and local governments to actually talk about how we've enabled that to make that happen. And beyond that, right, there's this notion of getting money to particularly small and medium business enterprises. And in the US, you've heard a lot of discussion around doing that for minorities, particularly Black and brown communities. Look, the number one creator of jobs in the Black and brown communities are created through small and medium enterprises. So getting them capital to ensure that they're running is huge because it has such an impact on the community. And so, yes, you talked about $50 million investment focused on Black and African American small businesses. So certainly we want to help provide money into the capital pool that can be used to lend to these businesses. But we're also looking at ways that we can support technology, because the majority of money that's actually lent to small and medium business enterprises isn't necessarily from the big banks. It's from mid-tier banks and smaller banks. And so how do we help those banks grow, and how do we help them have the right technologies so that they have the ability to take the friction out of the lending process? And so we're doing a lot with thinking about technologies and partnerships that can actually help with having that technology used by small and medium-sized lenders to take friction out to get the money to small and medium-sized businesses. And then beyond that, we're looking at ways to actually offer tools and capabilities to support those businesses in terms of how they operate their businesses. So it's a chain of events. It's not one activity, but it's certainly something that's a huge part of what we've announced as part of our initiatives around our racial inequality and social inequality efforts that we've announced as a business.
No, I appreciate sharing that, Bill. I love our inclusiveness here that we've been focused on at the company. So that's really great to hear. So it looks like we're running out of time. So Bill, thank you for sharing your time and perspective. I'm positive our viewers have learned a wealth of valuable information.
What we learned today is Microsoft's mission in financial services is to help them grow responsibly and deepen their customer relationships with a comprehensive cloud platform strategy.
The unprecedented market conditions will continue to develop, which will further spotlight the importance of technology to rapidly respond, recover, and reimagine new normal.
In the era of co-opetition, the behaviors towards fintechs will continue to change as partnerships with financial institutions are growing in importance to both augment and accelerate their own capabilities in this new digital connected economy.
And finally, we've discussed how new business models will evolve, where FSI will need to bring value-added services to its customers, and how Microsoft is uniquely positioned to co-innovate and partner building new offerings in this space.
Really great stuff here. Thank you, Bill, for sharing your perspectives.
Definitely. Joe Hansen, let's go ahead and move on to Q&A. What are some of our viewers asking?
Sure. So we've got a question in here coming from Anonymous, Bill. Over the past year, there have been continued evidence of blurred lines between fintechs, big techs, and platform providers. Where do you see this headed in the future?
Yeah, thanks for the question. It will continue to be blurred just because of the nature and acceleration of a startup to growth and the available capital that is being invested in these organizations to help them grow. So I don't think we should be concerned about the blurred lines. I think from our perspective, we will continue to invest in our core capability sets around delivering across Azure, Office 365, Dynamics 365, our Power Platform, our GitHub for our dev community, and using other assets around our business like LinkedIn, et cetera, to create a solution set that our customers can leverage and build on. We'll have some things specific to the financial services industry around data models and extension of our capabilities that enable specific solutions for the financial services industry. And then we will continue to work with that broad set of partners that you just described, small, medium, and large. If they're providing best of breed solutions, we're going to be out there talking to them about how they can continue to expand on those solutions using our capability set. And then jointly, how can we go to our customers together to help them leverage those capabilities to accelerate their transformation journeys. So to me, it's not a matter of blurred lines. To me, it's a matter of understanding capabilities and understanding the use of technology and partnering, and then having that ability to get to our customers to show them the value.
Thanks for sharing that, Bill. This is a question from Anonymous. I actually get this all the time, and I have to decline to answer because I don't know the answer. Is Microsoft thinking about getting involved with payment solutions like the next Google Pay or Apple Pay?
Yeah, it's a great question, and I get that a lot too. And I'm certainly not here to pre-announce any products. I just go back to the comment that we've been very consistent and clear about our strategy not to compete with our customers. We are here to, enable our customers to grow and develop and drive to create value for their customers. And we're here to do that with our technologies. We're here to do that with our thought leadership. We're here to do that with our partner community to help them do that. So in that regard, we're not coming out with first-party capabilities to compete with our customers. We're here to help them think about how they can bring those capabilities and services to the marketplace with our help. I get this question a lot, particularly around data, because we have an opportunity in the data space to actually help our customers understand their data estates, where they can mine data, understand their past, so that they can plan for the future. But also the notion of data sharing and the value of bringing multiple data sets together, and us having the unique position in the marketplace where we're not competing with customers. We can bring many customers who are in like industries to think about data sharing and data value creation, with us having the ability to manage that data, control that data, and keep the privacy and ownership of that data clean, but still allow them to work together. And so that allows us to talk about consortium models around data. It allows us to talk about partnerships differently across industry around data. And so that's a big part of our strategy around not creating first-party solutions to compete with our customers.
Thanks, Bill. We've got another question in the chat window. This one is, with expectations increasing and evolving, will the traditional financial services companies be able to keep up, or will they be taken over by these non-traditional players?
You've got to keep a pulse on what customers are desiring and what they want. And so this notion of keeping up is real, right? I made the comment earlier that this notion that many customers today, particularly younger customer segments, aren't tied to this idea of I have to do financial services with traditional tried and true brand in financial services. And so if customers are willing to switch and try things, if the experience is better, if the value is better, if the solution is more tailored, if it's real time, if it's faster, if it's embedded in my experience, they will decide who they play with. So yes, the traditional institutions have to keep up. They have to drive change. They have to leapfrog and take on ideas that smaller players might bring to the market, and address that quickly. And they will do that in many different ways. The institutions will do that on their own, or institutions will create ecosystems to compete. And I raise a good example of that in the US with the notion of PayPal's Venmo capability to create person-to-person payments was taking off in the US marketplace, which meant that customers of traditional banks weren't using their tools to use person-to-person payments. So they were leaving their bank environment and going to Venmo, and banks got together and said, why don't we create a utility function that we can all leverage to compete against Venmo? And they did. They created Zelle. Now Zelle is embedded in pretty much all the tier 1, tier 2 banks, and that's keeps a customer within the bank's environment to do that person-to-person payment where they were leaving in the past. That's a great example of adaptability. So you're going to see adaptability on a one-on-one basis, or companies coming together to work within industry, or companies coming together across industries to work together. You're seeing that a lot with regards to thinking about how do institutions compete with Amazon. So you're seeing the transportation industry, the retail industry, the financial service industry coming together to think about ideas to how do they all stay relevant with customers. So you're going to continue to see that as part of staying relevant.
That's great. I have another question here from Anonymous Bill. If you used your crystal ball and looked into the future at 2030, what will financial services look like? And I suspect that you're going to play basketball with 4 presidents by then and have a shot block on Obama like he did with Reggie Love. But what will financial services look like in 2030?
That would be pretty cool. You're giving me a task. So by 2030, I've got to meet with at least 4 presidents, and maybe I will get a game with Obama. I'll try that. I want Jordan on my team though when I play him.
Awesome.
I think you're going to continue to see the extension of financial services embedded in experiences. And you can think about that from a consumer lens. And there are examples of that today, right? The extension of payments being ubiquitous with of purchasing now, right? Just embedded in the process, right? Whether that's in an e-commerce space or whether that's what Amazon is trying to do with their stores of the future, where you walk in, put your stuff in a cart, and you walk out, and the transactions occur. So the idea of experiential use of financial services, not just on a transaction basis, but as part of an experience, I think you're going to see more and more of that, whether it's in lending or mortgages, auto lending, et cetera. And that extends into the business space as well too, right? Because business to business commerce in terms of payments and receipts and the transactions that occur around that are going to continue, right? I think you're also going to see it speed up because I think industries are going to come together in different ways to think about how they work together. I mentioned the example of retailing and transportation trying to get together to think about how you compete against the Amazon juggernaut. At the heart of these industries coming together, whether it's retailing, whether it's the experience of automotive and technology coming together to create a different experience with riding in a car. Typically, all of these things end up with some exchange of value at the end of the day. And that exchange of value means a financial services institution or institutions are going to be involved in making that happen. And so I just think there's going to be more and more ideas that are going to pop up that we haven't thought of yet by 2030 that you're going to see down the road.
Thanks, Bill. We've got time for one more question. And this question's around, as financial services organizations look to use more cloud technology, what is your thought process for helping them leverage it?
First and foremost, it's a technology discussion. So, and it's a technology discussion in relationship to the business strategy they're looking to achieve, right? So, whether their strategy is around creating additional value through different experiences for their customers, different products or services, the extension into different business models, the extension of creating new revenue streams, the extension of getting into new businesses altogether. Whatever that strategy is, the enablement of that strategy is going to come down to the use of technology and the other perspective around cultural readiness for that change to occur. And those are two areas that we spend a lot of time with our customers on, thinking about the technology and thinking about the cultural readiness. Because if the organization, people-wise, skill-wise, talent-wise, culture change-wise isn't ready for the change, the outcome is probably not going to be what is hoped for. So spending a lot of time thinking about that. And then once you have those conversations around technology, then you get into the use cases and business cases around what's the technology strategy that makes sense. And again, that's around agility and speed to get you there and flexibility to offer things quickly around the spectrum of how your employees operate, how your employees use data, how your employees bring data and product to a customer experience differently, the channels that are created in terms of customer interactions. And as you get into those discussions and the business models and the economics around the cost of having agility, resiliency, and scale, that leads you down a path of on-prem solutions versus cloud solutions. And that business model is going to be different based on the company, where you operate, what region you operate in, the size of the company. And so that's a very specific business case that should be made. And in most instances, cloud obviously gives you advantages to that business case. So it's brought in to be a big part of the conversation, and it's brought in to be a point of aspiration to get there, because that's the efficient frontier. And that's what Satya talks about in terms of the idea of a cloud being a fabric, technology being a fabric in everything. And so that's how we talk about it with our customers, is not just, hey, let's do cloud for cloud's sake. It's How does that fit into your business strategy, your tech strategy, your culture strategy to get there? And then how do we make the case to have a multi-horizon approach to get you there over time?
Thanks, Bill, for sharing that perspective. Thank you for joining us and sharing your perspectives on all these topics. Any closing comments and thoughts for our audience?
No, it's just a really, really exciting time. You're going to hear more about our continued focus of specific capabilities to serve this industry more and more, particularly as we talk about our cloud strategies for industry. And so I'm excited about the things to come. I'm excited about the space. There's so many incredible things happening in terms of new things and new ideas and new businesses that are meant to create value for customers and businesses. And it's exciting to be on the forefront. And so I thank you for having me here. I appreciate everybody who tuned in. Hopefully, folks that tuned in walked away with some new ideas and thoughts. And it's going to be an exciting 2021.
Looks like we're out of time. Thanks again for joining us live or watching on YouTube and asking questions.
If you haven't already, be sure to register for FSI notifications and invites by visiting aka.ms/FSI Fridays.
We're also open to constructive feedback, so please send us your comments and suggestions at aka.ms/FSI Fridays feedback.
Be sure to catch recordings of our previous sessions on the FSI Fridays YouTube channel at aka.ms/FSI Fridays recap, where you can also post any follow-up questions that weren't covered today.
Don't forget to subscribe and like our video on our YouTube channel.
And a real quick shout out to our video producer, Alan Mock, for making these new stages look awesome and keeping this experience seamless for us and our guests. Johansson, we have such an awesome lineup for the rest of January. Why don't we give the audience a preview of what's happening next week?
Thanks, Edwin. To wrap up January, we're introducing our new solution showcase, where we're going to be joined by Steve Tetroff and Ken Kuzak from our partner Nudesic, who has a really neat solution enabling customers to quickly and easily apply AI to business scenarios.
You won't want to miss it.
Thanks, and see you next time
on FSI Fridays.